Why trading feels so personal. Sit with this for a moment. No matter how many books you read, no matter how advanced your strategy becomes, there's a part of trading that will always feel personal. Because every click isn't just a decision about risk. It's a moment where your self-worth, your fear, your need for validation all show up on the screen. That's why this work can feel so heavy. Because you're not just managing positions. You're managing your identity. This video is about learning to separate the two. So you can finally trade with clarity instead of carrying the burden of proving yourself every day. This video is not financial advice. It is for educational and personal development purposes only. Trading involves real risk, and nothing here guarantees results. Always do your own research and take full responsibility for your decisions. Chapter 1. When every trade feels like a test. You sit down at your desk. Your charts are clean. Your plan is clear. But as soon as you click buy, something shifts. Suddenly, this isn't just a trade. It feels like a test. A test of whether you're good enough. A test of whether you've finally made it. A test of whether today you'll prove to yourself, and maybe to everyone else, that you belong here. This is why trading feels so personal. Because you're not just managing a position. You're managing your identity. I once worked with a trader named Jonas. He was 33, living in Stockholm, trading crude oil futures. He had a solid process and months of positive performance. But he told me, every time I place a trade, I feel like I'm about to be judged. Even if no one is watching, it feels like someone is scoring me. It didn't matter if the setup was perfect. It didn't matter if the risk was planned. As soon as he entered, he felt exposed. Like the outcome of that one trade would confirm something about who he was as a person. That's what makes trading so intense. You can't separate your decisions from your sense of self. Unless you train yourself to. Because when every trade feels like a test, you lose perspective. You start managing emotions instead of probabilities. You react to price action not as data but as commentary on your worth. You judge yourself by whether you're winning or losing right now. Ask yourself, how often do you feel a surge of anxiety when you click submit? How often do you replay losing trades in your head, long after the market is closed? How often do you feel like you need to redeem yourself after a red day? This isn't about the trade. It's about the story you've attached to the trade. Here's how you start to change that. First, reframe the act of entry. Jonas started saying to himself, out loud, I am placing a planned bet, not taking a personal test. That simple phrase helped him remember. Trading is a business of probabilities, not verdicts. Second, track your emotional state before and after each trade. Write it down. Calm, anxious, hopeful, fearful. Over time, you'll see that the emotional spike doesn't correlate to better outcomes. It only makes execution harder. Third, create a ritual to separate your identity from your performance. At the end of each session, Jonas would write this sentence. My worth does not rise and fall with my pendulum. It felt awkward at first. But repetition rewires belief. Fourth, limit your review window. If you're replaying trades obsessively, set a rule. I will spend no more than 30 minutes reviewing today's trades. Then I'm done. This protects you from turning reflection into rumination. Fifth, remember that no single trade defines your skill. One outcome is statistically meaningless in a large sample size. Professional traders think in series, not in moments. Jonas eventually told me. When I stopped treating every trade like a test, I felt like I could breathe again. That's what happens when you detach your self-worth from the outcome. You get your clarity back. You get your energy back. And you finally get to trade with steadiness instead of fear. If this sounds familiar, you're not alone. Almost every trader carries this weight at some point. But the moment you stop trying to prove something with every click, you start to trade like a professional. And that's where everything begins to shift. Chapter 2. The burden of proving yourself. There's a quiet pressure that most traders feel but rarely name. It's not just about making money. It's about proving something. Proving you're smart enough. Proving you're capable. Proving you're not wasting your time here. And sometimes, proving to people who don't even know how trading works. That you can succeed on your own terms. I worked with a trader named Helena. She was 36, living in Madrid, trading the DAX. She'd left a corporate job to trade full-time. Her friends and family didn't understand. Every holiday, someone would ask, so, how's your little trading thing going? She'd smile and say it was fine. But inside, she felt like every trade was evidence for or against her decision. She told me, I feel like if I don't succeed soon, everyone will think I'm just playing pretend. That burden is heavy. Because when you're trading to prove yourself, you stop seeing trades objectively. Every loss feels like an indictment. Every drawdown feels like confirmation that you're failing. Every slow period feels like time running out. Ask yourself, who are you trying to prove yourself to? Maybe it's your parents. Maybe it's your old colleagues. Maybe it's a version of yourself that still isn't convinced you deserve success. Here's the truth. The market doesn't care about your need for validation. It doesn't care how long you've been working. It doesn't care how much you want to show everyone you can do this. All it responds to is your process and your discipline. When you let your need to prove yourself drive your decisions, you start to take trades you shouldn't, because you can't stand sitting out. Hold losers longer, hoping to turn them around and avoid admitting you were wrong. Over-leverage to hit big wins that will impress someone, even if they're not watching. Helena had to learn that no trade could ever deliver the feeling she was chasing. She thought one big win would finally silence the doubt. But it never did. Because proving yourself is an endless loop. Every success brings a new benchmark you have to meet. So how do you step out of it? First, write down exactly who you feel you need to impress. Be honest. Seeing it on paper makes it easier to question whether their opinion actually matters. Second, create a statement of purpose that belongs only to you. Helena's was, I trade to build freedom and self-respect. Not to validate anyone else's expectations. Read it every day before you start your session. Third, track when you feel the impulse to overtrade. Usually, it shows up strongest right after a loss or during slow periods. Pause. Ask yourself, am I trading this to prove something, or because it's a valid setup? Fourth, set limits on how often you check your pendulum. The need for constant reassurance feeds the proving mindset. Try checking it only at the end of your session. Fifth, give yourself credit for the discipline, not just the outcome. After every week, write down 3 things you did well that had nothing to do with profit. This retrains your brain to value process over performance. Helena told me later. When I finally let go of trying to prove myself, trading felt lighter. I didn't realize how much energy I was spending defending my choice to everyone else. Here's what I want you to remember. You don't need to justify your path. You don't need to prove your worth to anyone. The moment you release that burden, you create space for real growth. And that's when trading becomes a craft. Not a test of your identity. Chapter 3. When winning means you're good enough. Most traders start out thinking profit is the goal. And of course, you need to make money if you want to survive in this business. But over time, something deeper happens. Winning stops being just about money. It becomes about identity. Every green day feels like proof you're smart, disciplined, worthy. And every red day feels like the opposite. This is when trading stops being a craft and starts being a referendum on your value as a person. I worked with a trader named Aiden. He was 30, living in Dublin, trading US equities. He was thoughtful and methodical. But any time he had a losing day, he couldn't let it go. He'd replay the trades all evening. He'd cancel plans with friends because he didn't feel he deserved to relax. He told me, if I'm not winning, I feel like I'm failing at life. Like I'm just wasting everyone's time. That's what happens when you fuse self-worth with pendulum. Trading becomes an emotional roller coaster. Win, and you feel invincible. Lose, and you feel like a fraud. It's exhausting. And it's unsustainable. Ask yourself, have you ever felt ashamed to tell someone you had a red day? Do you feel anxious to open your platform because you can't handle seeing losses? Do you secretly believe that your worth rises and falls with your results? This isn't about strategy. It's about the story you tell yourself about what winning means. Here's the truth. Profit is not proof you're good enough. It's just the temporary outcome of a probabilistic process. You can do everything right and still lose. You can do everything wrong and still win. Aiden eventually realized he'd been using trading to compensate for old insecurities. He'd grown up in a family where success was the only way to get approval. If he wasn't performing, he wasn't seen. No wonder every red day felt like erasure. So how do you start to detach your worth from your wins? First, create separation in language. Instead of saying, I lost, say, this trade lost. Instead of, I failed, say, this setup didn't work. This small shift helps remind you that your outcomes aren't who you are. Second, practice scheduled reflection. Don't let losses bleed into every hour of your life. Set a time to review trades. Say, 5 to 6 p.m. And when it's done, close the platform. Aiden called this his mental closing bell. Third, write a self-worth statement that has nothing to do with trading. For example, I am valuable because I show up, because I care, because I am learning. Repeat it every day before you start. It will feel awkward at first. That's okay. Fourth, track how you respond emotionally to winning and losing days. Notice if you give yourself permission to rest only when you're up. Ask, would I treat a friend this way if they had a loss? If the answer is no, you know it's time to change your standard. Fifth, celebrate discipline over outcome. If you stuck to your plan, that's a win. If you respected your stops, that's a win. Aiden eventually started logging behavioral wins in a separate journal. Over time, it helped him see progress independent of profit. He told me later, when I stopped making every trade about proving something, I could finally focus on the work itself. I didn't realize how much pressure I was carrying. Here's the truth I want you to hear. Winning doesn't mean you're better. Losing doesn't mean you're worse. They're both just part of the process. You are enough, whether you're up or down. When you believe that, trading becomes a craft, not a measure of your worth. Chapter 4. Losing as proof you're a failure. If winning feels like proof you're good enough, it follows that losing starts to feel like proof you're a failure. This is one of the hardest patterns to break. Because no matter how much you understand risk management, no matter how many times you remind yourself that losses are part of the game, a red day still lands like a personal verdict. You're not just taking a loss. You're confirming every fear you've ever carried about yourself. I worked with a trader named Natalie. She was 41, living in Vancouver, trading Forex. She was consistent most months. But any time she had more than 3 red days in a row, her mindset collapsed. She'd start saying, "I knew I couldn't do this. I'm just pretending." Even though her stats were solid over the year, she let a single stretch of losses erase all evidence of her capability. She told me, "When I lose, it doesn't feel like just a trade went wrong. It feels like proof that I'm not cut out for this." That's what happens when you let losses define you. They don't just cost you money. They cost you clarity. They cost you trust in yourself. And if you don't address this pattern, you'll start making desperate decisions to avoid the feeling of inadequacy. Over-leveraging to redeem yourself. Revenge trading to prove you still belong. Avoiding your journal because seeing the loss in writing feels unbearable. Ask yourself, how often do you replay losing trades over and over in your mind? How often do you hear the voice saying, "You're failing, not just this trade failed"? How often do you avoid your stats because you don't want to see confirmation of your fears? Here's the truth. Losing is inevitable. It does not mean you're incompetent. It means you're participating. Natalie eventually realized that her fear of losing was rooted in old experiences. Growing up, she was taught that mistakes weren't tolerated. That if you failed, you were weak. No wonder every red day felt like exposure. So how do you start to break the link between losing and feeling worthless? First, practice radical objectivity. After every session, write exactly what happened without any judgment. For example, trade hit stop loss due to volatility increase. No commentary about who you are. Just facts. Second, create a neutral review protocol. Natalie used a script. My job is to execute my process. Sometimes the process produces losses. This is part of the work. Repeating this helped her step out of shame and back into clarity. Third, set a weekly audit time. Only review your performance during that window. No late night rehashing. This protects your emotional energy. Fourth, track your compliance rate separately from Pandal. Ask daily. Did I follow my plan? When you see that you're consistent, even when results are uneven, you start to rebuild trust. Fifth, learn to stop trading after a defined loss limit. Natalie set a rule. If I hit my daily max loss, I step away. No exceptions. This broke the cycle of spiraling from loss into deeper loss. Over time, she discovered something surprising. She could have losing days without losing herself. She told me later, "I used to think a loss meant I was failing. Now I see it just means I'm in the game." Here's what I want you to remember. Losing does not make you a failure. It makes you a trader. The faster you can accept that, the sooner you'll find the steadiness that professionals rely on. Your worth has never depended on your results. And it never will. Chapter 5. The fear of other people finding out. Some traders can handle their own disappointment. They can tolerate the ups and downs privately. But what they can't stand is the idea that someone else will see them losing. It feels like exposure. Like shame. Like proof that every doubt people had about your path was right all along. I worked with a trader named Omar. He was 39, living in Manchester, trading crude oil. He'd left a stable engineering career to trade full-time. His family was skeptical. His friends didn't understand. So every time he had a drawdown, he felt like he was living under a microscope. He told me, "I'm not even afraid of losing money. I'm afraid of everyone saying, 'I told you so.'" That fear changed the way he traded. Instead of following his plan, he'd try to avoid any drawdown at all. He'd cut winners too early so he could show consistent greens. He'd hide losing trades from his accountability partner. He wasn't just managing risk. He was managing perception. Ask yourself, how often do you take profits too soon because you want to show a win? How often do you avoid sharing your journal because you don't want anyone to see your mistakes? How often do you feel relief not because you made money, but because you didn't have to explain a loss? This fear isn't about trading. It's about approval. It's about belonging. It's about the story you tell yourself about what other people will think. Here's the truth. Other people's opinions don't pay your bills. Other people's approval doesn't create your edge. And most of the time, other people aren't thinking about you nearly as much as you fear. But I know that's easier to say than to feel. Omar grew up in a family where success was public. Every accomplishment was praised. Every mistake was scrutinized. No wonder trading felt so exposed. So how do you start to break free of this fear? First, write down the names of the people you feel you have to impress. Be specific. Then ask yourself, do these people understand trading? Do their opinions affect my ability to improve? Do I actually value their perspective? Seeing the answers in black and white can be liberating. Second, create a private space for your learning. Omar started journaling in a notebook he never shared with anyone. It became a safe container where he could be honest without worrying about judgment. Third, set boundaries around what you share. You don't owe anyone your real-time handle. You don't have to explain every trade. You don't have to justify your journey. Fourth, practice neutral transparency. When you do share, describe your results without apology or drama. For example, this week I followed my plan. I took 2 losses and 1 gain. All within risk parameters. Over time, this normalizes the reality that losing is part of the work. Fifth, build your own definition of credibility. Instead of thinking, I'm only credible if I'm winning, reframe it. I am credible because I show up, because I'm honest, because I keep learning. This creates internal stability no external validation can shake. Omar eventually told me. Once I stopped trying to make everyone comfortable with my choices, trading felt simpler. I didn't realize how much energy I was spending on managing impressions. If you fear other people finding out you're imperfect, remember this. You don't need their permission to learn. You don't need their blessing to grow. The only person who has to approve of your process is you. When you stop performing for an audience, you free yourself to do the real work. Quietly. Honestly. On your own terms. Chapter 6. When a losing day feels like personal rejection. Some losses just feel like numbers on a screen. You note them, you learn, you move on. But others cut deeper. They feel like a message. You're not wanted here. You don't belong in this game. You're never going to be good enough. It's as if the market itself is turning you away. I worked with a trader named Peter. He was 46, living in Melbourne, trading the Nikkei. He was confident when things were going well. But any time he took a string of losses, he felt like he was being personally rejected. He'd say, "It feels like the market is punishing me for trying." When losing feels like rejection, it's hard to keep perspective. You start seeing randomness as judgment. You start assuming normal drawdowns mean you should quit. You start believing the market is an authority that decides whether you're worthy. Ask yourself, have you ever felt like a losing day was proof you're not cut out for this? Have you ever heard the voice that says, you should just stop embarrassing yourself? Have you ever felt like the market itself was telling you no? That feeling isn't coming from the screen. It's coming from the old stories you've carried into trading. Peter grew up with a father who criticized everything he did. Nothing was ever enough. So when a trade failed, it didn't feel neutral. It felt like another person in his life telling him he didn't measure up. Here's the truth. The market is not a person. It doesn't know you. It doesn't care about you. It's not capable of rejecting you. Because it's not capable of accepting you either. It's just a mechanism. A reflection of supply and demand. That's it. But your mind will assign meaning to the randomness because it wants a narrative. It wants a reason for the discomfort. And if you've been trained to see failure as rejection, that will be your default story. So how do you start to break this pattern? First, practice naming the story out loud. Peter started saying to himself, before every review, a losing day is not a rejection. It's a cost of participation. Hearing it in his own voice helps separate fact from feeling. Second, track your compliance rate on losing days. Most traders abandon their process when they feel rejected. Instead, focus on behavior. Did you follow your risk plan? Did you take only valid setups? Did you avoid revenge trades? If you did, that's success. Even if you lost. Third, write down 3 things every losing day taught you. This reframes loss from condemnation to education. Peter kept a notebook just for these lessons. Over time, it helped him see that every red day was moving him forward, not pushing him out. Fourth, create a ritual to close the day emotionally. When you finish, say this out loud. This session is complete. I am allowed to rest. Then physically step away from your trading space. Fifth, remind yourself that the only real rejection is quitting on your own growth. As long as you're learning, you are progressing. No outcome can take that away. Peter eventually told me. Once I stopped taking losses personally, I started seeing them as data. I didn't realize how much my old wounds were shaping how I felt about every trade. If you feel like losing is personal rejection, remember. You are not being judged. You are not being expelled. You are simply participating in a system that doesn't owe you certainty. And the moment you stop needing the market's approval, you become free to trade with steadiness and self-respect. Chapter 7. The loop of self-punishment after a loss. It starts the same way every time. You take a loss. Maybe it's bigger than you planned. Maybe you broke a rule you promised yourself you'd follow. At first, there's regret. Then the regret grows into something heavier. Self-criticism. Shame. A quiet voice that says, "You deserve to feel bad for this." That's the loop of self-punishment. And it can feel harder to escape than the financial loss itself. I worked with a trader named Michelle. She was 32, living in Cape Town, trading gold futures. She was smart and meticulous. But any time she made a mistake, she'd spiral. She'd replay the trade over and over. She'd tell herself she was careless, undisciplined, unworthy. And then, as if to prove the point, she'd withhold anything that might bring relief. She'd skip meals. She'd cancel plans. She'd refuse to do anything enjoyable. She told me, "If I feel awful enough, maybe I won't mess up again." This is why so many traders get stuck in the cycle. They think punishing themselves will create discipline. That shame will protect them from repeating mistakes. But it doesn't. It just drains your resilience. Ask yourself, how often do you tell yourself you deserve to feel bad after a losing day? How often do you replay trades in your head as a form of self-punishment? How often do you deny yourself rest because you think you haven't earned it? Here's the truth. Shame doesn't create discipline. It creates avoidance. The more you punish yourself, the less you want to engage with your process. Because why would you willingly step into an environment where every mistake becomes a moral failure? Michelle grew up in a family where success was expected and errors were met with criticism. No wonder she turned every drawdown into a reason to withhold care from herself. So how do you break the loop? First, separate behavior from identity. Write this after every loss. I made a mistake. That does not mean I am a failure. This may feel artificial at first. But repeat it enough, it changes the narrative. Second, create a structured review protocol. Michelle adopted a simple framework. What did I plan? What did I do? What will I adjust? No judgment. No stories about her worth. Just facts. Third, set a maximum review time. She gave herself 20 minutes to analyze any losing day. Then she closed her notebook and walked away. This prevented rumination from turning into self-attack. Fourth, plan an act of self-care after each session. Win or lose. It could be a walk. A good meal. A call with a friend. You're not rewarding yourself for performance. You're demonstrating that you are still worthy of care regardless of outcome. Fifth, track your self-talk. Write down the sentences you say to yourself after losses. Then challenge them. For example, "I'm terrible at this. I'm still learning. One day doesn't define me." Michelle told me later. When I stopped punishing myself, I actually made fewer mistakes. I had the energy to learn instead of just feeling ashamed. That's the paradox. You don't become more disciplined by beating yourself up. You become more disciplined when you feel safe enough to stay engaged. If you recognize the loop of self-punishment, know this. You are not alone. You are not defective. And you don't have to keep treating yourself like the enemy. The moment you decide to respond to losses with curiosity instead of cruelty, you start to build the resilience that lasts. Chapter 8. The addiction to proving you can win. There's a hidden hunger that drives many traders more than they realize. It's not the hunger for wealth, or freedom, or even mastery. It's the hunger to prove, to themselves and to everyone watching, that they can win. That they're not just dabbling. That they're not delusional. That they really can succeed in this arena. I worked with a trader named Marcus. He was 43, living in Atlanta, trading sand futures. He was smart and capable. But he could never walk away from a red day. No matter how rational he sounded in the morning, by afternoon he was locked in a cycle of overtrading. He told me, "I can't stand ending the day as a loser. I have to prove I can fix it." That mindset sounds determined. It sounds gritty. But it's actually a form of addiction. The addiction to proving you're capable. Here's why it's so destructive. It turns trading into an emotional battleground. Every session becomes a contest where you're fighting to validate yourself. You stop caring about process. You start caring only about redemption. Ask yourself, how often do you feel you have to make up for a loss the same day? How often do you feel relief not because you traded well, but because you ended positive? How often do you keep pushing past your plan to avoid feeling like you've failed? The truth is, the need to prove you can win usually comes from deeper wounds. Marcus grew up hearing that he was unreliable, that he couldn't finish what he started. Trading became his way to disprove those voices. But in trying so hard to prove them wrong, he lost sight of the only thing that matters: executing a process without attachment to any single result. So how do you break this pattern? First, define what winning really means. Is it ending every day green? Or is it showing up with integrity, regardless of the outcome? Write your definition down. Marcus eventually settled on this. Winning means I followed my rules. Nothing else. Second, create a hard stop rule for the day. He committed to shutting down after 3 trades, win or lose. At first, it felt like failure to walk away red. But over time, it became proof of maturity. Third, practice sitting in the discomfort of an unfinished day. When you feel the urge to take one more trade just to feel redeemed, pause. Ask, am I trading to improve my account or to repair my ego? If it's the second, you step away. Fourth, track your end-of-day emotions separately from your pandle. Marcus kept a log. Did I feel steady or desperate? Did I respect my plan? Did I need to win to feel okay? This helped him see that the days he felt most grounded weren't always the most profitable. Fifth, celebrate the act of stopping. Every time you close the platform without trying to force a comeback, you build trust in yourself. Marcus used to write, "Today I stopped when I said I would." That is growth. Over time, something shifted. He realized he didn't have to prove anything to anyone, including himself. He told me, "Trading got simpler when I stopped making every day a test of my worth." Here's what I want you to remember. You don't have to keep proving you can win. You only have to keep proving you can show up, follow your process, and accept the outcomes. Because in the end, your consistency is what speaks for you, not any single day's result. When you trade to grow, not to prove, you finally get to feel steady. And that steadiness is what makes lasting success possible. Chapter 9. The fantasy of the clean slate. Every trader has thought it at some point. If I could just wipe the slate clean, I'd be fine. Maybe you've had a big drawdown. Or a string of losses you don't want to look at anymore. Maybe you've blown an account and feel too ashamed to face it. And so you fantasize. Starting over. New broker. New strategy. New spreadsheet with no red numbers staring back at you. It feels like the perfect solution. But more often than not, the fantasy of the clean slate is just another way to avoid the discomfort you don't want to feel. I worked with a trader named Daniel. He was 35, living in Lisbon, trading Forex. Whenever he hit a losing streak, he'd close his account, open a new one, and convince himself he was starting fresh. New account, new rules, new name on the dashboard. But within weeks, the same pattern showed up. Overtrading after losses. Sizing up to make it back. Avoiding his journal because it felt like evidence of failure. He told me, "I thought if I could just reset everything, I wouldn't feel so ashamed. But I always ended up right back where I started." That's the problem with the clean slate fantasy. It changes the scenery, but it doesn't change you. Ask yourself, how many times have you closed an account to escape regret? How often do you think a new strategy will erase your old mistakes? How often do you avoid reviewing your history because it's too painful to see? Here's the truth. Your past doesn't disappear when you pretend it didn't happen. It follows you into every new account, every new plan, every new promise. Daniel eventually realized that the only way to create a real clean slate was to face the past, not run from it. He had to look directly at his history and learn from it instead of trying to bury it under a fresh start. So how do you begin this process? First, review your entire trading history without judgment. Print out your statements. Highlight patterns. Not as evidence of failure, but as data. Daniel called this an inventory of lessons. Second, write down the recurring themes. Ask, when do I trade best? When do I lose focus? What emotions drive my worst decisions? When you name these patterns, you take away their power. Third, create a single, written plan for how you will trade moving forward. One account. One strategy. One set of rules. The more you consolidate, the less tempted you are to scatter your focus every time discomfort arises. Fourth, practice transparency. Daniel started sharing his journal with a mentor once a week. It felt vulnerable at first, but over time it helped him feel accountable to growth instead of to perfection. Fifth, replace the fantasy of the clean slate with the commitment to continuous improvement. Write this somewhere you'll see it. I don't need to erase my past to grow from it. Daniel eventually told me. Once I stopped trying to start over, I finally started moving forward. Here's the truth. You don't need a new account to become a better trader. You don't need to pretend your losses didn't happen. You only need the courage to look at your history with curiosity instead of shame. Because the moment you do, you free yourself to build something real. A process grounded in awareness, not avoidance. That's when trading stops feeling like a cycle you can't escape. And starts feeling like a skill you can master. Chapter 10. The temptation to overcompensate. After a losing day. Or a losing week. Something shifts in your thinking. You start telling yourself that today has to be different. That you need to make up for what you lost. That you can't keep falling behind. And suddenly, your plan doesn't feel big enough. You add more size. You look for more trades. You convince yourself that if you can just push a little harder, you'll get back to even. This is the temptation to overcompensate. And it's one of the most destructive impulses in trading. I worked with a trader named Laura. She was 40, living in Edinburgh, trading the FTSE. She had a consistent approach and usually respected her limits. But any time she finished the week negative, she felt a familiar urgency. I have to recover this now. So she'd start trading setups she would normally skip. She'd double her position size to speed up the recovery. And more often than not, she'd end up digging the hole even deeper. She told me, "I'm disciplined when I'm ahead. But the minute I'm down, I feel like I have something to prove." Ask yourself, how often do you feel the urge to make it back right away? How often do you abandon your process because you can't stand seeing your account in red? How often does the need to recover lead to your worst decisions? This isn't about your strategy. It's about your relationship to loss. Overcompensation is rarely driven by logic. It's driven by the fear that you're falling behind. That you're failing. And ironically, the harder you push to escape that feeling, the more you confirm it. Here's the truth. You don't have to recover anything right now. Trading is a long game. No single session redeems or condemns you. So how do you break the pattern? First, define your maximum daily and weekly loss limits in advance. Write them down. Laura created 2 rules. No more than 2% loss per day. No more than 5% per week. Once she hit those numbers, she stopped trading, no matter what. Second, build a pause protocol. Anytime you take a significant loss, step away from the screen for at least 30 minutes. No reviewing. No planning the comeback trade. Just breathe. This interrupts the urgency that drives overcompensation. Third, track your recovery trades separately. Label them in your journal. Recovery attempt. Over time, you'll see that most of them do more harm than good. Laura realized her recovery trades had a negative expectancy, while her normal trades were consistently positive. That awareness changed everything. Fourth, practice ending a session negative on purpose. This feels radical, but it's powerful. When you choose to walk away while you're still down, you teach your nervous system that you don't have to fix discomfort immediately. That is a form of mastery few traders ever develop. Fifth, reframe what being behind means. Write this somewhere you can see it. I am not behind. I am on my timeline. My process determines my progress, not any single day's result. Laura eventually told me. Once I stopped trying to get it all back in one day, I finally started to see consistent growth. My account grew slower. But it finally grew. That's the paradox. When you stop needing to overcompensate, you create the space for steady gains. You learn to trade from clarity, not fear. And you discover that no loss is permanent when you respect your process. If you feel the pull to overcompensate, remember. You don't have to catch up. You don't have to prove anything. You only have to keep showing up, steady and honest. Chapter 11. When you measure yourself by Pandle alone. You start the week with good intentions. You tell yourself you'll focus on process, not just outcome. You'll trust your edge. You won't let one day define your worth. But as soon as you see the numbers, all of that disappears. Green days feel like validation. Red days feel like failure. And before you realize it, your Pandle has become the only measure of whether you're good enough. There was a trader named Philip the first met in a small coaching group. He was 44, based in Toronto, trading crude oil. He was organized, analytical, and thoughtful about his plan. But every morning, the first thing he did was check his balance. Every evening, the last thing he did was check it again. If the number was up, he felt relief. If it was down, he felt worthless. He said to me once, "I know I should care more about consistency, but I can't shake the feeling that the only thing that matters is profit." This is how trading becomes a trap. You start measuring your identity against a line on a spreadsheet. It doesn't matter if you executed perfectly. If you lost money, you feel like you failed. It doesn't matter if you broke every rule. If you ended green, you feel like you succeeded. Ask yourself. How often do you judge your entire week based on your account balance? How often do you feel like you can't rest unless you're ahead? How often do you ignore your process as long as you're making money? Here's the truth. Handle is data. It's not a verdict. It's not a moral scorecard. Professional traders track it to measure performance over hundreds of trades. Not to decide whether they're worthy human beings. Philip eventually realized his attachment to Pandal came from a lifetime of measuring himself by external benchmarks. Grades. Performance reviews. Approval from other people. Trading was just another arena to keep score. So how do you break this dependence? First, stop checking your account balance constantly. Philip created a rule. I will only review Pandal at the end of the week. At first, it felt unbearable. But within a month, his anxiety dropped by half. Second, define success in behavioral terms. For example, did I follow my entry criteria? Did I manage risk as planned? Did I respect my stop? If the answer is yes, that's success. No matter the outcome. Third, track process wins in a separate journal. Every day, write down at least one thing you did well that had nothing to do with profit. Over time, you start to internalize a different definition of progress. Fourth, practice sharing your results neutrally. Philip began emailing his accountability partner weekly summaries without drama. Followed plan 80% of the time. 2 trades outside criteria. Net result. 1.2%. No stories. Just facts. This helped him detach emotion from the number. Fifth, remind yourself daily. Pandal is the outcome of my process, not the measure of my worth. Write it where you see it before every session. Philip told me later. Once I stopped checking my account every hour, I finally felt like a trader instead of a gambler. Here's what I want you to hear. You are not your Pandal. It is just information. A reflection of probability and discipline over time. If you can learn to see it that way, you free yourself from the cycle of elation and shame. And you give yourself space to build consistency that doesn't depend on any single day. When you stop measuring yourself by profit alone, you start trading from a place of clarity and respect. That's when everything begins to change. Chapter 12. The fear of slowing down. For many traders, activity feels like safety. As long as you're clicking, analyzing, adjusting, you feel like you're doing something. Like you're moving forward. Like you're proving you belong here. But the moment you pause, the moment you trade less, the anxiety creeps in. What if I'm missing something? What if this is the day the perfect setup appears? What if slowing down means I'm falling behind? I once spoke with a trader named Sophia. She was 37, living in Vienna, trading DAX futures. Her greatest fear wasn't losing. It was being idle. She'd built an identity around being relentless. Outworking everyone. Never missing a move. But over time, she realized that all that motion was costing her clarity. She told me, I don't know how to stop without feeling like I'm failing. This is what happens when your sense of worth is tied to constant action. You start believing that pausing is weakness. That waiting is wasting time. That stillness is a liability. Ask yourself. How often do you feel restless if you haven't taken a trade in a while? How often do you scan markets you don't usually trade, just to find something to do? How often do you feel guilty stepping away, even if no setup is present? Here's the truth. In trading, activity is not the same as progress. Sometimes, slowing down is the most productive thing you can do. Because it's in the pauses that your mind integrates what you've learned. It's in the quiet that you develop discernment. Sophia had to learn that stillness wasn't the enemy. It was the foundation of professionalism. So how do you start to embrace slowing down without feeling like you're falling behind? First, define clear trading hours. Sophia committed to trading only during the European Open and the first hour of the US session. No more drifting into endless screen time. Second, set a maximum number of trades per day. Her rule became 3 trades. Then I stop. At first, it felt restrictive. But over time, it became liberating. Third, create a purposeful non-trading routine. If you're not in a trade, have something else productive to focus on. Reviewing past sessions. Updating your journal. Studying market structure. This prevents boredom from turning into impulsive action. Fourth, track the quality of your trades relative to your state of mind. Sophia started noting. Was this trade from clarity or urgency? She discovered her best results came when she was calm enough to wait. Fifth, write this mantra where you can see it. Slowing down is not losing. Slowing down is respecting my edge. She told me later. I thought trading was about always being active. Now I see it's about knowing when to act and when to wait. If you struggle with the fear of slowing down, remember. The market will be here tomorrow. You are not falling behind. You are not wasting your potential. You are simply giving yourself the space to make better decisions. Professionals don't measure progress by how many trades they take. They measure it by how often they act with intention. When you learn to pause without guilt, you unlock a deeper level of confidence. The confidence that comes from knowing you don't have to chase every move to be a real trader. Chapter 13. The Comparison Trap. If you spend any time around other traders, in chat rooms, on social media, or even just reading articles, you'll eventually feel it. The creeping sense that everyone else has it figured out. That they're more disciplined, more profitable, more skilled. And no matter how much progress you're making, it never feels like enough. I remember talking to a trader named Elise. She was 29, living in Montreal, trading NASDAQ futures. Every morning, before she even looked at her own charts, she'd scroll through Twitter. Screenshot after screenshot of massive wins. Threads about perfect entries. People claiming they'd never had a red week. She told me, I start my day feeling behind before I've even placed a trade. This is the comparison trap. It's one of the most corrosive patterns in trading. Because when you measure your journey against curated highlights from strangers, you lose sight of your own progress. Ask yourself, how often do you feel inadequate after seeing someone else's results? How often do you question your plan because another trader uses a different method? How often do you feel like you're behind, even when you're improving? Here's the truth. Comparison distorts reality. You're comparing your unfiltered experience to someone else's highlight reel. And the market doesn't care how your journey stacks up against theirs. Elise eventually realized she wasn't actually learning from these traders. She was just using their success as a weapon against herself. So how do you step out of the comparison trap? First, curate your inputs. Elise created a rule. No social media before my trading session. That alone lowered her anxiety by half. Second, define your own metrics of success. For example, am I following my process? Am I improving my discipline? Am I learning from my mistakes? When you measure against yourself, you stop needing to compete with everyone else. Third, track your own progress in writing. Every month, Elise reviewed her journal and wrote down 3 areas of growth. Even when her panel was flat, she could see evidence that she was evolving. Fourth, practice gratitude for your timeline. Write this sentence every week. I am exactly where I need to be in my journey. It feels simple. But repeat it often, it starts to feel true. Fifth, limit how often you discuss your results with others. Elise used to share every win and loss in a Discord group. Eventually, she learned that trading in public was adding pressure she didn't need. She told me, when I stopped reporting every detail, I felt like I could breathe again. If you find yourself comparing constantly, remember, you don't know the full story behind anyone's screenshots. You don't see the drawdowns, the sleepless nights, the trial and error. All you see is the polished outcome. And even if it were all true, it wouldn't change your path. You have your own learning curve. Your own temperament. Your own definition of success. When you stop measuring yourself against others, you reclaim your energy. Energy you can put into refining your craft instead of questioning your worth. Because the only comparison that matters is the one between who you were yesterday and who you are becoming today. Chapter 14. The weight of unrealistic expectations. Every trader starts with a vision. Sometimes it's modest. I want to build a second income. Other times, it's ambitious. I'm going to replace my job in 6 months. But somewhere along the way, that vision can turn into an unspoken demand. I should be farther along by now. I should be more consistent already. I should never have losing months anymore. These expectations feel motivating. They feel like standards. But more often than not, they become the weight that breaks your process. I once worked with a trader named Trevor. He was 42, living in Auckland, trading Forex pairs. He'd been profitable for almost a year. But because he hadn't yet matched his old salary, he felt like he was failing. He'd say, if I can't replace my income soon, what's the point of all this work? That pressure showed up in every decision. Forcing trades to hit arbitrary targets. Increasing size to accelerate progress. Feeling shame when he had a normal drawdown. Ask yourself, how often do you feel like you're behind your own timeline? How often do you judge your worth by whether you've met your expectations? How often do you make impulsive choices to catch up to a goal? Here's the truth. Expectations are just thoughts. They are not reality. They are not laws. They are not guarantees. Trevor eventually realized that his expectations weren't motivating him. They were strangling his creativity and clarity. So how do you release their grip? First, write down every expectation you're carrying. Be specific. I should be full-time by now. I should be making X per month. I shouldn't have losing weeks anymore. Seeing them on paper makes them easier to challenge. Second, Ask for each one. Is this expectation realistic, given my experience and capital? Who told me this should be my timeline? What evidence do I have that this is required for success? Often, you'll see these beliefs came from comparison, not from facts. Third, reframe your expectations into intentions. Instead of, I must be profitable every month, try, I intend to follow my process and improve my consistency over time. This language softens the pressure without lowering your standards. Fourth, measure your progress over longer horizons. Trevor used to judge himself weekly. He switched to quarterly reviews. Over 3 months, normal variance smooths out. He could finally see how far he'd come. Fifth, remind yourself daily. I am here to learn, not to meet arbitrary deadlines. Write it somewhere you'll see it before you start trading. He told me later. Once I stopped demanding perfection, I started seeing progress. I'd been so focused on outcomes that I forgot I was still building skills. If you feel buried under your expectations, know this. They are not obligations. They are not definitions of your worth. They are just thoughts. And you can choose to let them go. When you do, you create space to focus on the only thing that matters. Executing your plan, refining your edge, and showing up with curiosity instead of pressure. That's how trading becomes sustainable. Not when you demand certainty, but when you allow yourself the grace to grow. Chapter 15. Detaching your identity from trading. For a lot of traders, this work starts as a skill. But over time, it becomes something more. A label. A source of pride. A way to answer the question, who am I? And when your identity fuses with trading, everything feels amplified. A green month doesn't just feel good. It feels like proof you're valuable. A red month doesn't just sting. It feels like proof you're failing as a person. I knew a trader named Isaac. He was 39, based in Berlin, trading the DAX full-time. He'd left a corporate career to trade, and for years, it was all he thought about. When he was winning, he was confident and open. When he was losing, he shut down completely. He said to me, if I'm not trading well, I don't feel like I'm anything. This is what happens when your work becomes your identity. You stop seeing trading as just one part of your life. It becomes the filter through which you judge your worth. Ask yourself, how often do you describe yourself first and foremost as a trader? How often does your mood depend entirely on how you're performing? How often do you feel empty when you step away from the screens? Here's the truth. Trading is something you do. It's not who you are. When you forget this, you give the market total power over your emotions. Isaac eventually realized he needed to build a life beyond the charts. Not because trading was unimportant, but because he was more than a pandal. So how do you start detaching your identity from trading? First, create clear boundaries. Isaac set a rule. No looking at charts after 6 p.m. This gave him time each day when he wasn't defined by his results. Second, invest energy into other roles you care about. Partner, parent, friend, learner. When you nurture these identities, trading becomes one facet of your life instead of the whole story. Third, practice ending the session with neutrality. He began saying aloud when he closed his platform. Today I traded. Tomorrow I will trade again. Neither success nor loss defines me. Fourth, track your self-talk. Write down how you describe yourself after a winning day and a losing day. Notice if your language shifts from I had a red day to I am a failure. That's the signal your identity has fused too closely to your results. Fifth, build rituals that connect you to your humanity outside of trading. Isaac started running in the mornings without his phone. He said it was the first time he felt present without thinking about performance. He shared with me later. I thought trading had to consume me to succeed. But when I made space for the rest of my life, my results improved. I wasn't so desperate to prove myself anymore. If you've fused your worth to your trading, remember this. You were valuable before you ever placed your first trade. You'll be valuable after your last. Your character, your relationships, your integrity. These are what endure. When you learn to hold trading lightly, you can finally show up without fear. Because you're not proving anything. You're just practicing a craft. And that's when you become both more effective and more free. If you've listened to this entire journey, take a moment to breathe. Because you've just done something that most traders never find the courage to do. You've looked honestly at why this work can feel so heavy. Why it can feel so personal. Why it so often feels like your identity is on the line every time you click buy. Trading is unique. It puts a mirror in front of you. It shows you every insecurity, every hope, every old story you still believe about who you have to be to deserve respect. And if you don't pause to question those stories, they'll run your decisions. They'll turn your process into a performance. They'll convince you that your worth is measured by a number on a screen. But you don't have to keep living like that. You can trade with discipline instead of desperation. You can learn without shame. You can hold your outcomes lightly. If any part of this resonated with you, I want to invite you to do something right now. Pick one small step you heard today. One shift that felt meaningful. Maybe it's limiting how often you check your Pandle. Maybe it's writing down the names of the people you feel you need to impress. Maybe it's creating a ritual that reminds you, I am more than my trading. Commit to trying it for the next week. And if you feel like it, share that commitment in the comments. There's power in naming your intention out loud. It makes it real. It makes it yours. Thank you for spending this time here. Remember, your worth has never depended on your results. Your value is not up for debate. Trading is just a craft. A practice. A path you walk. Not a verdict on who you are. The day you stop needing trading to prove something, is the day you finally trade with freedom. And that's when this work becomes not just profitable, but meaningful.